Hello traders, this is Brian from FinancialTradingJournal.com and welcome back to this week's FX Weekly Analysis. By the time you watch this tomorrow morning or tomorrow afternoon, it will be October 5th. At this point in time, it's still Friday night, the 4th. It's 7:30 p.m. right now. I'm recording this ahead of time because I won't be home tomorrow. I'm going to be busy doing stuff. So that's why I'm pre-recording it. The video will most likely be uploaded sometime in the morning, probably 8 or 9 a.m. And the reason why I'm mentioning this is related to the major headline this week, which is the U.S. government shutdown and the U.S. debt ceiling. I mentioned that because at this point in time, 7:30 tonight, the U.S. government is still shut down and the debt ceiling isn't solved yet. So I don't know, maybe in the next 12 hours they might solve it so that when I upload this video tomorrow morning, the information or the statement that I'm making now is obsolete. So just keep that in mind when you're watching this video, that at this point in time, at the time of recording, they're still shut down, then debt ceiling is still a problem. So moving forwards, those are the two things of concern. One is a domestic problem and one is an international problem, or at least that's how I see it. The debt ceiling is mainly for, if that's not raised, then the U.S. loans will default, and that's their obligations to whoever loans them money, so that's most likely other countries. Because that's a pretty big figure. It's like $16.7 trillion or something. So if that defaults, then that will affect them on an international scale, whereas the U.S. government shutdown is a domestic problem because currently, and I think the numbers are around 800,000 federal employees are off work this week. I think it's been going on for about 3 or 4 days now, so they haven't been working. Depending on how the budget is fixed or not, that will affect, I'm guessing, whether or not they lay off workers or keep the workers. If they do lay off workers, that's a bad thing because that will ultimately affect NFP, non-farm payrolls, which will be bad because that number will be increased, so there's going to be less new jobs rather than more jobs. So that will show that the economy is not improving, which will ultimately affect how the Fed will execute QE, quantitative easing. Because in September, from the last FOMC, as I mentioned previously, Bernanke and his team for FOMC decided not to reduce QE yet. So the question moving forwards is, how long of an extension are we going to get? Because he said, if the economy improves, then we'll reduce it. If it doesn't, then we won't. So depending on how the U.S. government affects things and how the debt ceiling affects things, that will affect how the Fed reacts, which will affect the dollar strength. So that's all very complicated because it's multi-levels, because we need to think about the perception from domestic point of view and international point of view. So that's moving forwards. For those of you that studied economics, this is pretty much international monetary policy plus domestic monetary policy combined all together, and then you have international exchange rates, obviously, because that's Forex, and how the Fed is going to be involved. So moving forwards, that's the mindset. The deadline for the debt ceiling is October 17th. If they default, then that's going to affect the perception of the US dollar, which will ultimately, I'm guessing this is where it's going to be leading to, whether or not the US dollar will remain to be the world reserve currency, and whether or not the Fed will be on top. Because if the world decides to use another currency as the universal currency, or the one to base it off of, then the Fed will no longer be in power or be the biggest one, and it'll be whoever's backing that other currency. So moving forwards, that's from the international perspective, along with the domestic of what might happen with the US. I'm pretty sure, though, they're going to solve the domestic problem before they solve the debt ceiling. But obviously I could be wrong. Maybe they might care more about international than domestic. But we'll see what happens moving forwards in the coming weeks. So that's all I have to say before we start the FX Week analysis. Let's get started. I will say it was a relatively weird week until today. So today is, I can say today because today is actually Friday. Normally I would say until yesterday, which was Friday, but today's Friday. For the most part, Monday to Thursday, relatively choppy, slow, and then today we had a lot of movement today because we are 4 days into the U.S. government shutdown at this point in time. So anyways, let's get started. So first up is the dollar CAD monthly chart. The month is over, so September's over, obviously, because it's October 4th now. I can actually talk about the monthly chart now. We did not have an engulfing candle, so that's good for bulls. And the trend line for the most part is still being held. On this chart right now, you'll see two highlighted zones. I just saw this first time I saw it. I didn't really pay attention to it before. It's not really an exact copy replica, but they're pretty similar. They're in different regions though. This one you'll notice is near the end of a downtrend. This is near the end of an uptrend, so they're at the end of something. But anyways, at the beginning you'll see green candle, long bottom wick, green candle, long bottom wick. Next one is an engulfing red candle, followed by a green candle, red candle, red candle. So they look the same. If pattern repeats itself, this candle is going to go down, and based on how it's looking right now, it's going to break the trend line, which would reinforce a move down. And if that does happen, then it will go down. And this is kind of along the lines of what happens with the US government and the debt ceiling. So that's the perception point of view. If the debt ceiling defaults and all that stuff, then the perception of the US dollar is not good. Then it's going to have US dollar weakness, and that would cause dollar CAD to go down, and that would be a reinforced move. So that's just the monthly chart. This is the only thing I noticed, and this is, for the most part, the only interesting thing I have to say about the dollar CAD this week. So moving on to the weekly chart. So as you can see in the weekly chart, we're still above the trend line. Previously, we did break down, as I mentioned, in the past couple of weeks, but we went right back up. Moving forwards, I mentioned we were going to test the lower limits of this pin bar before moving forwards. If the trend line holds, then we should bounce. That's pretty much the same consensus as I've been saying for the past 2 weeks now, because we're still stuck here. As you notice, every single week so far, the pin bar, we closed there. The doji, we closed there. This week, we still closed in the same region. So we have not really moved yet. We moved up and we moved down, but we're still back in the same place. So moving forwards, I'm just going to say the same thing. I expect it to test the low 1.02 or 1.015. That would potentially break the trend line in the interim. But if the trend line holds, and if those levels holds, then it should bounce right back up and continue moving up towards the targets up here, the magenta line and the black lines up there. So that's all for the weekly chart. Daily chart, we do have this small little range here, which will be better on the 4-hour chart. So I'm just going to switch right to that, because daily chart, there's really not that much to say here. So this is the, I guess, mini range, if you will, on the 4-hour chart. I just drew this based on these two tips at the top, parallel line down, and we are currently at this bottom trend line. If it has to test down here, it has to break this, and it also has to break that, and then it will test somewhere down here before bouncing up. Or if that doesn't happen, we could just go straight up from here. That's a possibility as well. But moving forwards, as I mentioned, we're just stuck here. If you were to extend this a little bit back, although it doesn't touch, it just goes to show that we've been stuck in this region for quite a while now. So dollar CAD, boring pair, not much to talk about. So that's it. I'm done for this pair. The only interesting part, as I mentioned, was on the monthly chart, and that's about it. Up next, we have the Aussie dollar. So as far as the Aussie dollar goes, the only interesting thing is I was right last week. I mentioned the 0.93 area, or that line or the region support level was going to hold, and it did hold, and then it bounced throughout the week. That's pretty much the only interesting thing. I don't recall there being any other interesting facts. Just to remind you, my targets on this pair would be 9.7, 9.6. That's where the reversal is going to happen. If it does reverse, that's the 50% fib level. So that's the target. Assuming the 93 level still holds going forwards, and we continue to break resistance on the way up, then those are the targets to enter shorts up there. So on to the weekly chart. Weekly chart. The only thing interesting on the weekly chart is the past 2 weeks we had the pin bars, and they were bearish pin bars. This week we have a solid green candle. We closed near the highs, but overall this is a good sign for bulls, given that the 93 region did hold. It looks slightly bullish now that it basically nullified the pin bars of the previous weeks. If it continues to go up at this point, we're looking for price to break the 95 region and then go towards the 96 and 97 region, as I mentioned previously. So that's it for the weekly chart. Daily chart, nothing much to say there. 4-hour chart, this is the other interesting thing, I guess. We have this, I guess this is a bearish wedge, because in most cases this wedge results in price breaking downwards, because if the converging side is pointed up, then it's going to go in the opposite direction, which is down. So whether this wedge comes out or not, we'll see what happens in the coming weeks. It's probably going to go up to the top one, and then if it can't break that, then probably it'll break down. Otherwise, if this trend line does hold, then it should be able to enough to push it through the 95 region to target the 96 and 97 region. So that's it for the Aussie dollar. Again, kind of like the dollar CAD, these are both boring pairs. So anyways, on to the euro dollar pair. Although it's only been 4 days into this month, as it stands right now, the euro dollar monthly chart shows a pin bar, a bearish pin bar at the top. So that's a shooting star candle, by the way. Too early to say. I'm not going to comment on this because we still have 26 days of this month left. Or actually 27 days, because Halloween's 31st, right? So 27 days left of this month, and too early to say to comment on this pin bar. So anyways, on to the weekly chart. Weekly chart, as I mentioned in previous weeks, the target is still up in the 1.575 region, because that's where the 2 points of these trend lines converge. You may notice that it's out of place now because price has moved significantly to the right relative to where the convergent point is, because that should have happened last week or this week. But as price continues to move to the right, that means as time goes by, the converging point is no longer valid. So I mean, if you were to extend these lines, then the target would be slightly different. But I'm still targeting the 1.57 and 1.575 regions for potential areas of shorting it, because that's where the points converge. And that's also near that high and slightly above that high, depending on whether or not it touches that point. But moving forwards, as you can notice, depending on if it hits in the next candle or the candle after that, then the highs are not going to be coinciding with the convergent point. So anyways, that's it for the weekly chart. So as far as the daily chart goes, the only interesting thing to say here is price almost hit the 161.8 fib level this week. I think it got as high as 1.365 or 364, but the 161.8 fib level was at 1.3665. So it was just shy of about 15 to 20 pips or so. That's just the first target, as I mentioned previously. The real target is up at the 1.57, which is where these 2 points converge, or the 1.75, which is just slightly above the 1.57 area. So anyways, on to the 4-hour chart. There's this channel here. So this is what we slightly have right now, small upward channel. Currently, after markets closed, the old 127 level held, the 1.355 level held. If this level continues to hold into the coming weeks and this trend line holds as well, then it will be enough, hopefully enough anyways, pressure to keep going upwards, to support a move upwards. If not, if it breaks down, then this will be the beginning of the fall, and my targets of 1.57 and 575 won't happen. So we'll see what happens in the coming weeks. So that's it for the euro dollar. And finally, we have the pound dollar. So before I start forecasting or analyzing this pair, I just want to disclose that I did trade this week. I shorted it, and I also went long on it. Total, I probably got about 200 pips. I got about 50 pips on the way up and about 150 pips on the way down. I exited prematurely though, because today, Friday, it dropped about 150 pips today and it dropped about 100 pips yesterday. I didn't expect it to move this fast. It was an accelerated drop. So I think I may have exited prematurely, and that may have a bias on what I'm about to say now, because I have some pretty interesting theories on what might happen going forwards. There's going to be one on the monthly chart, one on the weekly or daily chart, and then there's going to be followed by 3 or 4 scenarios depending on what happens. So anyways, on the monthly chart, let's just start with the first one. You notice I have 2 fib lines drawn. Before we look at the fibs, look at how we, over here, notice how there's dojis and pin bars at the bottom here. Notice how this region also has similar dojis and pin bars there. Then you have two big green bars. So this is number 1 green bar, number 2 green bar, number 1 green bar, number 2 green bar. Then you have followed by, you can't see it right now, but this candle right here has a body, upper wick and lower wick. This month's candle, so October, obviously the month's not over yet. We're only 4 days into this month. But so far it has gone down. Now what I want to bring your attention to is how far down it has gone so far. You'll notice if you draw a fib line of the previous green candle, so this is the 100 point and this is 0, this candle dropped to the 23.6 level and then continued to bounce up. This one so far has also dropped to the 23.6 level, and we don't know what's going to happen yet because it closed at this level, which just so happens to be the 1.6 area, which is the round number. So possibly it could bounce. So this is one of the theories going forwards, and it might go up. So just keep these theories in mind. They're not scenarios. This is just a theory supporting upward move or downward move based on what happens. So this is the first one, 23.6 fib level retracement compared to the last big green candle of the last month. We'll see what happens moving forwards. So anyways, onto the weekly chart. If you just compare the month that we were looking at is from here to here, and this is the red candle right here. So this is long upper wick and a body, and then the next week it went down slightly more, and this was 23.6, and then it proceeded to go back up. And that's basically what we have now. We have these 4 candles, the 4 green candles made up the candle of last month, and then we have this upper wick similar to the one over here, and then we have this red candle, which is exactly at the 23.6 right now. This one, the 23.6, happened in the next week, but this one, the 23.6, is right here at the 1.6 area. So this is possible support moving forwards. So just a recap from last week, the 4 scenarios that I outlined was either it's going to bounce from the magenta line, bounce from the black trend line, overshoot the black trend line, or we trade the break of a confirmation after it breaks the daily trend line, which we'll get to on the next chart. Now, as for the daily chart, I have one more theory before we get into the scenarios. So notice how at the top here, just about 4 candles ago, we have a pin bar. This is a pin bar. I'll zoom in. So we have this pin bar right here, followed by a green candle, followed by 2 red bars. Now if you notice over here, scrolling backwards, you have a pin bar here as well, although different candle. This is red, the one that we have right now is green, followed by green bar, red bar, red bar. Now the move from here to here, from this top to the bottom there, is about 210 pips. The move that we have right now from the top to here is about 240 pips. So it's relatively close. If you go to the very bottom though, the very bottom of this drop went from there to there. This is about 250 pips before it bounced upwards and broke the previous high and tested again. So that's one possible theory of it could move up. So this theory in combination with the monthly theory could be supporting moves for this to move up. So now let's go through the scenarios. I'm going to cover the downward scenarios first before covering the upward scenarios. So moving down, the 1.6, whether it holds or not and bounces, then the 2 theories above, it will go up. So that's a bounce point. Or the next level that we have going down is the 1.595, which just so happens to be where the black monthly trend line coincides and the daily trend line coincides. So this is a pretty big converging point. So moving forwards, this will be effectively scenario number 4 from last week, where I said if it breaks the daily trend line, then that's going to be a downward pressure to keep going down, because after you break that, the only real level you have beyond that is the 1.575 area, which was the high over there. But if that breaks, then it's going to go straight back down to the 1.48 or 1.5 low regions down there. So that's what we have to the downside. Moving up, if it does bounce, okay, so far I haven't numbered the scenarios, but I'll do a summary at the end. So moving up, if either the 1.6 holds or the 1.595 holds, regardless, depending on if it goes up, we have several resistances on the upside as well. So I'm just going to switch to the 4-hour chart for this. So if we do bounce right now at the 1.6, if we bounce here or we bounce here, that's fine, doesn't really matter. Regardless, between these two blue lines, it has to bounce. If it does bounce, the first resistance is the magenta line, which is the 1.616 or 1.615, and that's also, if you look at it, the right shoulder of a head and shoulder pattern formation. You have this, which is the left shoulder. You have the head. This is the neckline, so this is between the two lines, the two blue lines. This is the neckline. If it bounces, this will potentially be the right shoulder, and that's where shorters are looking to enter on a retrace. That's also where I'm looking to re-enter. If that level does not hold, however, then we do not have head and shoulder formation, because if that doesn't hold, then the trend might still be in play, and we're going to target the upper regions. If we do target the upper regions, the first region of resistance will be the previous high at 1.625, 626. If that high doesn't hold, then we have the upward trend lines of the 4-hour channel up here, which also coincides with the downward channel lines and the black trend lines of the monthly chart. So up here in the 63 to 64 region is a possible resistance as well. So there are, I'm guessing, so let's just count. Either it bounces here, so this is one scenario revolving around the 1.6, another scenario revolving around this one, then another one scenario around the magenta, scenario around that high, and that one. So that's 5 scenarios. So let's just do recap. Scenario number 1, it bounces right here, 1.6. If it doesn't bounce, then we have scenario number 2, where it could bounce at 1.595. If that doesn't hold, it's going to go straight down to 1.575 for the next pivot point. If it bounces, scenario number 3, magenta line, possible head and shoulder. If that doesn't happen, scenario number 4 is the high of the previous of this week, basically. If that doesn't hold, scenario number 5 is the top, and that's the limit, basically. The top trend lines up there and the black trend lines up there. That's the 1.6364 region. So total of 5 scenarios on the pound dollar with 2 supporting theories. So that's it for this week's FX Weekly Analysis. Hopefully you guys enjoyed that. And I will see you guys next Saturday for next week's FX Weekly Analysis.